Research has found that the equities outperform inflation 90% of the time when inflation has been low and rising, but when inflation is high and rising, equities perform poorly. Could you elaborate more on the relationship between the equity price and the inflation?
Sure. 1970s for the United States, inflation was really out of control. So you had not just the high inflation, but high uncertainty. I always like to say uncertainty is one of the worst words for the financial market. So I think it really depends how much confidence the financial markets have in the Fed this year. I think for sure inflation will come down over the course of this year. The question is, how persistent will it be? And what I kind of like to emphasize over and over again is that wages are the biggest component of inflation as it affects a whole range of different industries. Inflation will continue to decrease, but I think it'll be above the Fed's target range of 2% by the end of the year. So the Fed will continue to be raising rates throughout the year.
What do surging inflation and Fed's aggressive hike say about the future stock market volatility? What are the risks to the market?
In this raising rate environment, will the Fed overreact? And will the Fed raise rates too high? And that's, I think, what the markets are concerned about. And that will increase the recession risk later in the year. The big dynamic that we haven't talked about as well is the split between growth and value investments. During the COVID era, American stock market really overvalued technology companies. We've already seen a lot of correction of that mismatch. But I think if the Fed raises rates too high, that will continue to put a lot of pressure on the technology stocks.
Mm-hmm. Has the 40-year high inflation peaked?
It's the base effect. Probably in retrospect, the United States overstimulated the economy last year, that the effects of COVID weren't that bad. That is what we are adjusting to. I think that's working its way through the system. But in a kind of market-based economy, you should be able to adjust to that, especially with the Fed decreasing its stimulus right now.
Mm-hmm. Do you still favor equities amid the surge in inflation and maybe slowing down cycle?
If the financial markets think the Fed is in control, then I don't think this will be a very bad year for the stock market. There'll be a lot of volatility, but it won't be a very big negative year. I think the markets have confidence right now. I think they think the Fed is doing the right thing. It's going to be painful for stocks. We'll get some good buying opportunities. Mm-hmm. And then just to be grit your teeth and to buy when we get those opportunities. I think that's going to be the winning formula for 2022. I love commodity resources, not because I think they're going to go up 1,000 times like some of our favorite tech stocks have, but more because I think the downside is relatively limited. As I said, we've come out of a 10-year bear market in commodities, which means that a lot of commodity companies are producing less and investing less in new exploration. So as long as the world economy continues to grow, demand will grow. And then the additional factor during this cycle, which I think a lot of investors are aware of, is the energy transition. So the demand for greener metals like copper and lithium and other kinds of greener resources will be even higher.
Which equity sectors could prove to be the most resilient?
Well, on the resilient side, I think I'm sticking with commodities. Energy, materials would be the leading sectors and the stronger sectors, I think. On the concern side, it's how bad a sell-off will have in these growth stocks. Again, so much damage has already been done in the first 2 months of this year, meaning that growth has come down to value. By the time the Fed increases interest rates, I think a lot of those disparities will have been washed out, and then we just need to look at the market overall.